Seniors and retirees, stop what you're doing. This is urgent. The IRS just announced a major filing rule change that goes into effect today, and if you don't understand it, it could cost you hundreds or even thousands of dollars this year. This isn't a minor update or something that only affects accountants. This directly impacts your Social Security, retirement income, deductions, and even your tax refunds. For years, seniors and retirees have relied on predictable filing rules to maximize deductions and ensure their benefits stay intact. But today, everything changes. Even if you've been filing the exact same way for decades, this new rule could trigger audits, reduce your refund, or cause delays in critical payments. The problem is, most people won't even realize they're affected until it's too late. We're breaking down exactly who is impacted, what forms and deductions are affected, and the crucial steps you must take immediately to protect your income and avoid costly mistakes. Whether you're fully retired, collecting Social Security, or relying on SSI or SSDI, this update is game-changing, and missing it could mean serious financial consequences. So if you want to make sure your taxes are done right, your benefits stay safe, and you don't leave money on the table, you cannot ignore this video. Watch closely, take notes, and hit that like button right now, because this isn't just news, it's your financial lifeline for 2026. If you just watched the hook, you already know this isn't your typical IRS update. Seniors and retirees have always counted on predictable filing rules, but today, everything shifts. Imagine opening your mailbox, expecting your usual Social Security statement or tax refund notice, and instead seeing a confusing letter from the IRS that leaves you wondering, did I do something wrong? Am I missing out on money I deserve? That's exactly what could happen if you don't act fast. And here's the harsh truth. Most people won't even realize they're affected until it's too late. So why is this rule change happening now? The IRS has adjusted filing regulations to tighten oversight and reduce fraud, but the unintended consequence is that seniors and retirees, people who often rely on fixed incomes, could be hit hardest. Things you used to take for granted, like standard deductions, retirement income exemptions, and even timing your Social Security reporting, now come under stricter scrutiny. The IRS wants more accuracy, more compliance, and more documentation than ever before, and that means a single missed form or overlooked number could trigger delays or reduce your refund. Here's what makes this especially critical. Many seniors don't realize how even small errors affect benefits. Social Security, SSI, SSDI, and retirement distributions are all intertwined with your tax filings. If the IRS sees discrepancies, even minor ones, it can freeze payments, trigger audits, or demand corrected filings that take weeks or months to process. For someone living on a tight budget, waiting weeks for a delayed payment can create real financial stress, impacting rent, groceries, medications, and everyday living. Now let's break down exactly what's changed. First, the new rule affects income reporting. In previous years, certain retirement income streams were treated more leniently. The IRS allowed minor inconsistencies to slide, assuming most seniors were reporting accurately. Starting this year, those same streams, pensions, IRA withdrawals, Social Security benefits, and even some annuity distributions must match IRS records perfectly. That means if your 1099s, SSA statements, or bank records don't align exactly, you could be flagged for review. Second, the IRS has changed filing thresholds for seniors. Before, many retirees with modest income could file later or qualify for simplified forms. Now, even small discrepancies in reporting, like an overlooked interest payment or a slightly miscalculated deduction, could require you to file a full return instead of using simplified forms. That might not sound alarming, but for someone used to relying on automated filing software or assistance from family members, it introduces complexity and risk. And here's where timing becomes crucial. The IRS isn't just changing rules, they're also tightening deadlines and review cycles. Letters that used to take months to arrive now come faster, and they expect responses faster too. Missing a response window by even a single day could trigger penalties or delayed refunds. This is particularly stressful for retirees who may not check their email daily, rely on physical mail, or are navigating digital portals for the first time. But don't panic just yet. The good news is that with the right preparation, you can avoid these pitfalls. First, you need to review all your income sources carefully. Compare every Social Security statement, 1099, pension notice, and bank record to ensure the numbers match perfectly. Even small differences, like a $10 discrepancy in reported interest, can trigger review flags. Accuracy is your best defense. Second, organize your documentation. Keep your SSA statements, bank statements, Medicare notices, and previous tax returns in one accessible place. If the IRS comes knocking, or more likely sends a notice in the mail, you'll have everything ready to respond quickly. Being organized isn't just convenient, it's a critical step to protect your income. Third, consider seeking professional advice. Many seniors assume filing is straightforward, but with these changes, even minor errors can have significant consequences. A certified tax professional experienced with senior and retirement income can ensure your return is accurate, compliant, and optimized. They can also advise on deductions, credits, and timing strategies that might save you money or prevent delays. Another critical change seniors need to be aware of is how deductions are handled under the new IRS filing rules. In prior years, many retirees could rely on standard deductions or itemized deductions without the IRS scrutinizing every single number. Now, however, there's much more attention on verification. For example, medical expense deductions are under closer review. If you claimed certain medical expenses last year, the IRS may now request supporting receipts, invoices, or statements to confirm eligibility. Even routine expenses like prescription medications, dental care, or certain assisted living costs might require documentation. This is especially significant for seniors who have recurring healthcare costs, because it could delay refunds if the IRS asks for proof and you're not prepared. One area that's causing particular concern is retirement account distributions. Many retirees assume that Social Security or IRA withdrawals are automatically reported correctly, but the IRS now cross-references all reported distributions with your tax return. If there's a mismatch, even a small one, it can trigger an inquiry. And it's not just about mistakes. Sometimes the problem arises simply from timing differences between when a bank posts a transaction and when the IRS records it. The result can be unexpected notices or delayed refunds if you don't respond quickly. Now let's talk about Social Security and SSI specifically. Seniors often think that these benefits are safe from IRS scrutiny because they're government payments, but that's not entirely true. The IRS uses Social Security information to calculate taxable income, and any mistakes in reporting supplemental income, part-time earnings, or state supplements can lead to confusion. For instance, some retirees live in states with additional SSI supplements or tax credits. If those payments aren't accurately reported, or if forms like the SSA 1099 aren't reconciled with your filing, it could delay your refund or reduce the amount you receive. Timing and preparation are everything under these new rules. With the IRS moving toward faster processing and stricter verification, a delayed response could mean waiting weeks or even months for refunds or corrected payments. For seniors on fixed incomes, that kind of delay is not just an inconvenience. It can affect rent, utilities, groceries, and medications. That's why it's critical to be proactive. Don't wait until you receive a notice. Start by reviewing every income source, every deduction, and every document you plan to submit. Let's break down some practical steps to ensure compliance and minimize stress. First, verify all income sources. That includes Social Security, SSDI, pensions, 401k, or IRA withdrawals, rental income, and any part-time work. Check every statement against your planned tax filing. Second, confirm all deductions and credits. This includes medical expenses, property taxes, charitable donations, and state-specific benefits. Make sure you have supporting documentation readily available. Third, keep organized records. Filing isn't just about submitting forms. It's about having proof if the IRS questions anything. The easier it is for you to respond, the the less likely you are to experience delays or complications. Seniors also need to be aware of common filing pitfalls. One is missing deadlines. Even a small extension in the past may have masked underlying reporting issues, but under the new rules, the IRS is less forgiving. Another is inconsistent information across different documents. For example, if your name, social security number, or bank account differs slightly on your SSA 1099 versus your tax return, it can trigger a review. These seemingly minor details can create major headaches if ignored. Another area worth highlighting is state-specific considerations. Many states offer supplemental payments, tax credits, or additional deductions for seniors. While these can be a financial boost, the IRS is now cross-checking these payments against federal filings more aggressively. If the IRS identifies discrepancies between federal and state reporting, it could delay not only federal refunds but also impact eligibility for state benefits. Being proactive means verifying that every state supplement or credit is accurately reflected on your federal return and having the documentation to prove it. Now, you might be asking, what about audits? Seniors often fear audits, thinking they're being targeted, but the reality is more about accuracy checks than punishment. The new rules are designed to catch inconsistencies and prevent fraud. That said, if the IRS flags your return, you will need to provide documentation. Being prepared is key. Keep receipts, statements, and SSA documentation organized and accessible. The difference between a smooth verification and a stressful audit can be as simple as being organized and knowing where your paperwork is. Let's also talk about protecting your income from scams. Unfortunately, scammers know that rule changes create confusion. Expect more calls, emails, and texts claiming to be from the IRS. Seniors are often targeted with urgent messages demanding bank information or personal details. Remember, the IRS will never call, email, or text asking for payment information. No legitimate government program will require you to pay to receive your benefits. Staying informed and skeptical of unsolicited communications is just as important as filing accurately. Another important point involves retirement timing and partial work income. Some retirees continue to work part-time or receive other forms of income. Under the new IRS rules, any earnings above previous thresholds must be carefully reported. Even small amounts can affect your tax liability or benefit calculations. The IRS is now matching reported wages to Social Security records with greater speed and accuracy. Failing to report properly could reduce benefits or trigger delayed refunds. For seniors relying on emergency or supplemental payments, this change matters even more. Programs designed to help low-income retirees or seniors with urgent expenses, like heating assistance, medical assistance, or state-level stimulus funds, require accurate tax reporting. Errors, mismatches, or missing documentation can prevent you from receiving these critical funds. That's why accuracy, preparation, and timely filing are essential this year. So, here's the takeaway for every senior, retiree, and SSDI recipient watching today. The IRS filing rule changes are real, they're immediate, and they're designed to enforce accuracy. But that doesn't mean you have to be caught off guard. Your Social Security, SSI, SSDI, pensions, and retirement income are all safe, as long as you act proactively. Accuracy, organization, and preparation are your best defenses. Take the time now to review every income source, double-check your deductions, confirm your SSA and bank statements, and ensure all documentation is in order. Remember, even small mistakes can trigger delays, but being proactive gives you control. You don't have to wait for a confusing IRS letter to arrive or risk missing a payment you depend on. By staying informed, keeping records organized, and responding promptly to any requests, you're not just protecting your income, you're protecting your peace of mind. And don't forget about scams. In times of change, fraudsters thrive. Always verify information, never give out personal details to strangers, and rely only on official IRS communications. The combination of vigilance and preparation ensures you stay ahead. This isn't just about taxes. It's about your financial security, your stability, and your ability to live comfortably in retirement. Take charge of your filings today, and you can turn what feels like a stressful change into an opportunity to streamline, protect, and maximize your benefits. If you found this video helpful, make sure to hit that like button now, share it with friends or family who rely on Social Security or retirement income, and stay tuned for more updates. Your financial peace of mind starts with the actions you take today. Don't wait. Secure your benefits and protect your income now.